please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching us on Business Lunch. I'm Nisha Podar, and today it's a news-heavy day and a lot of information coming in, especially from the oil and gas companies. And we'll take you through each one of them. But first, to the big news of the day: IOC, BPCL, HPCL on sign MoU with Saudi Aramco for 60 million tons per annum Ratnagiri refinery complex. It's a large MoU signed with huge amount of money really coming in. Manisha Gupta is right here to take us through the details.
Well, thank you so much for that. We are now joined by Amin Nasir, who's the president and CEO at Saudi Aramco. Mr. Nasir, first of all, many congratulations on this pact being signed with the country today. It is a huge one, nearly planned 60 million ton refinery in Maharashtra. What details of the same can you share with us at this point?
Well, for our the MoU signed today, we'll do the basic, the feasibility and then basic engineering, and then you get into front-end engineering. So hopefully, we will do our best with our partner to accelerate the process. What was mentioned that we are hoping for a completion of the whole project before 2025. In terms of the other areas that we are exploring within the Indian market, we are looking at different areas, as I said, not too much details because these discussions are at early stage with other partners.
Mr. Nasir, also, what is the quantum of this investment that you are looking to put, and are there other opportunities, other growth areas that you're exploring with India right now?
Of course, India is and we have a lot of dealings with a lot of Indian companies, and they are strategic partners in many ways. We supply close to 800,000 barrels per day in the Indian markets, so it is very important market for Saudi Aramco. The growth is very significant in the Indian market, not only in oil and petrochemical sector. So it is of strategic importance, and we are trying to create alliances and JVs with our partners. We have interest for a long time. This is the first time we culminate all of these efforts with a major agreement through this MoU. And we are looking, as I said, for further growth opportunities within the Indian market. As you highlighted, there's a growth opportunities, especially in the petrochemical sector as well. His Excellency the Minister highlighted that there is also interest from other companies like SABIC in the Indian markets. For Saudi Aramco, it has to be integrated between refining and petrochemicals, and this is where hopefully it will not be the only agreement that is signed. There are going to be other agreements hopefully in the future.
Mr. Nasir, I'm coming to that in just a bit, but about this MoU that has been signed today, until when do you see that yielding results? I mean, you did mention that by 2025 is when you do see that one really start functioning, but what have been the talks? When do we start seeing action there, and when do we start seeing the product flow out really?
As highlighted by the Prime Minister, it is 4%. The Indian market today is over 4 million barrels of import. You're looking at by 2040 close to 10 million barrels of consumption, and that is very high growth rates, considering this is the fastest growth rate in anywhere in the world. The interest, we are the biggest supplier of crude oil in the world. We have the highest reserve available. We are the most reliable player in the market, and we are, as I said, we have a huge interest in the Indian market, and we are through this JV, which is 1.2 million barrels per day, and hopefully through other JVs we will continue to meet and participate in that growth potential in the Indian market.
Well, absolutely. And as you said that, well, of course, Saudi Arabia, Saudi Aramco for that matter, has been supplying fuels to India for quite some time. Do you see an increase in that number? And also, it's not just about supplying fuels, because I understand, and as you've said earlier, that Saudi Aramco also is looking at supplying products, being part of this, taking stake, partnering, etc., with in sense of other petroleum products as well. What really has been the plan there?
Yeah, we went through a lot of things and discussions with our partners, and all what we have looked at, it meets our requirements in terms of participation. And as highlighted by His Excellency today in the interview, that the reforms introduced by the Prime Ministers and all are on the right directions, helping bringing additional investment to the Indian market.
Fair point, Mr. Nasir. Thank you so much for joining us and telling us all of that. Of course, we have more questions being asked to him. But Mangalam, the important point really is that this is one of the biggest deals that Saudi Aramco or any oil producer company, rather for that matter, is doing with India. What Mr. Nasir also said, that it is going to be the tune of $44 billion is what they're looking to spend in India in the coming some years. They, of course, opened an office last year into India as well, and that is where the whole of these plans started.
All right, Manisha, thanks a lot for taking us through that interesting conversation. But focus back on the markets. The Nifty, while is in the red, is off the low point of the day. The Sensex, in fact, as we speak, is in the green, and that's led higher by a couple of these IT stocks. Infosys, in fact, they report their results on Friday. That one's moving higher. The IT pack is moving higher, generally on the back of a weak rupee. So we'll keep an eye out on that. But also watch out for the global markets. Hang Seng as well as Shanghai ended in the green, but we were following some cues coming in from both Nikkei as well as the Korean market. So we were in the red by and large, primarily because of some weakness coming in out there. The European markets, well, they opened in the red, but they have recovered from the low point of the day as well. So all the three frontline indices, the CAC, DAX as well as the FTSE, all of them trading in the red but closer to the higher end of today's range. The only index which is underperforming, which has been underperforming all through this week, is the Russian index, down 13% this week. The story of the day have been oil marketing companies. They've taken a knock on reports that suggest the government has asked oil companies to absorb the price hike of 1 rupee per litre. Prashant is here to detail out the potential impact on marketing margins for all these companies. They're down anywhere between 6 to 8%, all the three frontline OMCs.
Just taking the stocks lower is essentially from agencies. It says the government has asked oil companies not to increase prices. I mean, essentially to absorb 1 rupee worth of fuel price hike, petrol and diesel. It is basically also asking oil marketing companies it's ruling out any cut in excise. That, has been confirmed to CNBC TV18 from government officials in the recent past. What would one rupee a litre absorption by OMCs really mean? Remember, the gross marketing margins that oil marketing companies used to be around 2.5 odd rupees or so for a couple of years, actually, before it bumped up quite significantly to between 3.4 to about 3.5 odd rupees, 3.3 to 3.4 rupees a litre for both petrol and diesel. But that is very recent. So 1 rupee absorption would take us back to marketing margins which oil marketing companies used to absorb just recently for a couple of years, which is around the 2.5 odd rupee a litre mark. So the immediate impact, even if they were to absorb 1 rupee, will not be that much. We don't know whether upstream companies will be asked to share this burden, this 1 rupee burden. If they are, then that would essentially lower the burden of oil marketing companies even further. But the big risk really is, in an election year, is the government essentially going back to the earlier era where, it used to dictate what oil marketing companies can do in terms of increasing prices on petrol and diesel. Is it junking deregulation? Those are the bigger questions. And if that is true, then I think it really sours the entire OMC story. Back to you.
All right. Thanks, Prashant, for putting all that into perspective. So junking, the deregulation of oil prices, that could be the big concern coming in for oil marketing companies. Remember, apart from ICICI Bank, which is the biggest dragger on Nifty 50, oil marketing companies are a big drag in the markets. Let's hear out from Sonal Bhutra what the brokerages are making of this, Sonal.
For that, Nisha, well, when last week the petrol and diesel prices were at record highs, Jefferies came out with a note where they said that in this financial year, because of the elections coming ahead, these oil marketing companies might be asked to absorb these hike in prices, and that's what's happening now. When reports are suggesting that these oil marketing companies might be asked to absorb these prices, this would lead to some unmet under-recoveries. So they're assuming for every 10,000 crore of unmet under-recoveries, which will be shared by these upstream and downstream companies in a ratio of 50:50, it would lead to a cut in their earnings estimates for FY19. So for the likes of ONGC and Oil India, the earnings estimates could be cut by 7 to 10%. For the likes of IOC and BPCL, they could see a sharp cut of around 9 to 10%. But for HPCL, which will have the highest share in these unmet under-recoveries, they could see a cut of around 13%. And that's why HPCL is the biggest loser in all these OMCs. Anting, on the other hand, also says that for every $1 per barrel increase in crude oil prices, prices of petrol and diesel have to be revised by 0.5 rupees per litre. If that doesn't happen, it will impact the retail marketing margins of all these OMCs companies, and it will also impact their profits. So for the likes of IOCL, it will impact 19% of their profits, that stands at 4,200 crores. For BPCL, it will impact 26% of their profits, that stands at 2,500 crores. And for HPCL, it will impact 27% of their profits, which is 2,200 crores. Even this, if it impacts the profitability of OMCs, but it only normalizes it because earlier the marketing margins were on the higher side, and now it will come to the normal average of around 2.2 to 2.4 rupees per litre. So that's why in the longer term, we'll have to really see if it actually fructifies. We also spoke to Narendra Taneja, and let's see what he had to say about this.
The petrol, diesel are decontrolled commodities, as you know, so the government can't really issue any instructions as such. But government being the biggest stakeholder in these companies, they can always have conversation on these lines so that the trust of the consumer, who is the most important person, is maintained. We see prices moving only in one direction, that's up and up. So I think it's to win the confidence of the consumer at this stage without really, upsetting any kind of the order which is in place. The government has asked the companies very clearly that they should, do their best in order to pass on the maximum possible benefit to the consumers. I don't expect the prices to go up to that level simply because demand and supply fundamentals are perfect. At the moment, there is no proposal. It has been discussed with the Ministry of Finance, but the Petroleum Ministry has said, but the Petroleum Finance Ministry is in no mood at the moment to have even any discussion on excise. But the companies have been asked to do their level best so that they can pass on the maximum benefit to the consumer.
All right, let's take it straight to the large transaction that got announced just some time back, and soon enough, after mustering under the pressure of the minority shareholders, looks like that Manipal has really succumbed to that pressure and has sweetened its offer for Fortis Hospital. But take a look at that particular counter, because it is not showing the kind of euphoria that it should be showing because of the kind of sweetening of offer that has really happened. So what will happen is Fortis Healthcare will continue to hold SRL as a majority owner of that diagnostics business, and not just that, the price for Fortis Healthcare, or the valuation as per the deal, has also been improved. In fact, we spoke to Manipal's MD and CEO, Mr. Ranjan Pai, on this development and the total valuation of Fortis after sweetening the offer. Hear him out.
Over the last 2 weeks, the feedback that we've got from our investors, they had three main concerns with regards to structure, valuation, and the amount of money that we are raising at this valuation. I think the revised offer answers all those three questions. The valuation of Manipal and Fortis are not equal. Fortis, if you have to take the enterprise value, you have to take the debt, and you have to take all the other, and the equity value. So the equity value is around the same, but the enterprise value of Fortis with the purchase of RHT comes to 11,400 crores. We will work closely with the company and the shareholders and find out a solution for either a short-term debt, or we can provide some debt to the company to acquire RHT. Right now, it's going to be held under Fortis, the current company, the way it is. Post the demerger and the merger with Manipal, then that joint company will buy the RHT.
All right.
Right behind me, of course, is the medium power radar DRDO product. The Arjun tank, of course, to my far left. staples, if you will, as far as the Indian armed forces are concerned. It's an eventful day, really. Key announcements from the stables of Mahindra, Ashok Leyland, and of course the Kalyani Group. Remember, Mahindra has inked the very first deal of the Defence Expo, signing a partnership with a Japanese company to manufacture heavy seaplanes for the Indian Navy at a coastal area. Saab, whose stables we're currently coming to you from, the Royal 3 radar, remember, is the Saab stable. There's also the L70 upgraded gun in my background. Saab, remember, is also a key participant this year as far as the Defence Expo is concerned, as being one of the interested parties in the Indian government's plan to upgrade, to procure close to 110 new jets as part of a 13 to 15 billion RFI. So several announcements expected, even as some overseas players have also their wares on the Defence Expo in full swing. Back to you.
All right, the expo is in full swing. In fact, Jude also caught up with Pascal Souris, the Senior Executive VP of Telus at the Indian Defence Expo in Chennai, and this is what he had to say.
These two MOUs are a great illustration of our policy in India. Thales has been present in India for 65 years, and we're obviously fully supportive of the Make in India initiative. We believe it makes a lot of sense for the development of industry in India. Thales itself is very much involved in this Make in India initiative, and the two MOUs we have signed with MKU in two different sectors, the optronics sector and small arms sector as well, really means that we will localize in India with this partner all the competencies to build not only, by the way, for the Indian market, but also with the possibility to export from India.
And we'll come to exports in just a bit, but if you could just take me through what exactly does the MOUs that you've signed entail? What exactly will you do in India with regard to localization itself?
So we will localize with MKU optronic sights to be mounted on rifles, as well as the development and production of a close quarter combat rifle, F90, which is already very much used by the Australian Defence Forces. So this is a very important step we're taking to fully localize in India all the capabilities necessary to build these kinds of devices and equipments. And the objective with this partner is really to use India as our manufacturing base and export base for other countries as well.
The Reliance joint venture, I believe, is all set to take off and get operationalized by the end of this year. Can you give us a status update? What exactly is the scene with regard to the Reliance joint venture for the Rafale deal?
So the joint venture with Reliance was established in the framework of the Rafale contract to fulfill our offset obligations. This is ongoing, so obviously we're now talking of transferring the necessary competencies to this joint venture to fulfill what we have planned to do for the equipments that Thales supplies on the Rafale. You know that basically we supply the electronic part, electronic equipments on board the Rafale.
So by the end of this year, will the deal take form and shape on the ground?
Yes, absolutely. We want to make very good progress in the course of the year, yes, to become operational as quickly as possible.